In this video, I'll discuss one of the biggest tech companies in the world, Samsung. It is not only one of the biggest in the world, but it is also one of the most well-diversified ones. Now, I'll go through the latest business results and metrics behind this conglomerate, and I'll answer the question if I'll invest in the company. The company has a diverse range of products, including smartphones, TV appliances, and much more. But is Samsung a good investment? In this video, I'll make a deep dive into the company's business fundamentals and key metrics to determine whether Samsung is worth buying. As always, this article is for educational purposes only and is not intended as financial advice. Samsung is one of the largest and most diversified companies in the technology industry. They have a significant presence in the global smartphone market. According to Canalys, the biggest smartphone research analytics company, Samsung stands only behind Apple when it comes to market share. As of Q4 of 2022, the market share for Samsung is 19%, while for Apple it is 23%. But as you can see, over the last 2 years, most of the times the global market share is held by Samsung as opposed to Apple. According to Fortune Business Insights, the global smartphone market is projected to grow from $484 billion in 2022 to $792 billion by 2029, at a CAGR of 7.3%. This is a good growth rate for the overall industry. Samsung are also a major player in the TV and home appliances industry. According to Global Newswire, the consumer electronics market was valued at $728 billion in 2021, and it is expected to reach $964 billion by 2028, registering a CAGR of 4.8% during the forecast period of 2022 to 2028. The largest growth will be seen from the Asia-Pacific region. This is normal as the purchasing power of these areas is increasing the fastest, and at the same time the smartphone use is still not significant. Finally, Samsung is a major player in the semiconductor markets. Starting off with the semiconductor industry, Samsung is a leader in the foundry chip market. The foundry chip market is a third-party chip manufacturing service. Instead of companies building their own multi-billion-dollar manufacturing facilities, they hire Samsung to do it for them. On the provided chart, you can see the global foundry market share. A massive leader in this space is TSMC with a 60% market share, and in second spot comes Samsung with a 13% share. Samsung is the leader in the memory chips market. This is another segment of the semiconductor space. Samsung has nearly also a 40% share of all DRAM memory chips sold worldwide. When it comes to NAND memory chips, Samsung is again a leader with a 33% market share as of Q2 of 2022. According to different research companies, the memory chip market is expected to grow by 7% to 15% on an annual basis until around 2030. Another substantial business segment for Samsung is the LED display market. The global industrial display market size was valued at about $5 billion in 2021, and it is projected to grow at a compounded annual growth rate of 6.1% from 2022 to 2030. It is not a huge market, but it is a market in which Samsung yet again is a leader. Samsung is also a leader in the smart TV space. The global smart TV market size was valued at about $200 billion in 2022, and it is anticipated to expand at a compounded rate of 11.4% from 2023 to 2030. As we now know all the main industries in which Samsung is a player, let us now discuss the business fundamentals of the company. In terms of debt management, Samsung has a very low debt-to-equity ratio, indicating that they are effectively managing their debt levels. To be precise, Samsung has almost no long-term debts in relation to its equity. The DE ratio is only 0.025. This means the total debt is equal to only 2.5% of the equity of the company. This is extremely rare and it showcases exactly how good and secure the company is. Also, all of its short-term debts are at a very stable level. They also have strong liquidity and are with ample cash reserves on hand to cover their short-term liabilities, as even the most conservative short-term debt ratio, the cash ratio, is above 1. Samsung has a healthy dividend of 2.7%. But what is incredible is that the dividend payout ratio is currently sitting at only 0.10. This means the total dividend payments are equal to 10% of the net income. This means the dividend could potentially see a drastic increase if the company wishes to increase it. And not only that, even more important is that these dividend payments are very safe. The 5-year dividend growth rate for Samsung is 27%, which is well above the inflation rate, indicating the dividend is increasing on a real inflation-adjusted basis. The company efficiency is also tremendous, with a ROE of 28% and a ROIC of 27.8%. Both of these are 2 times higher than what is considered as an acceptable level. Over the past 10 years, the basic shares outstanding for Samsung have fallen by 10%, but over the past 5 years, the company has not assumed any share buybacks. To summarize everything up until now, the company has an incredible moat, the company has very solid efficiency and a healthy and secure dividend, the company has extremely low debt levels, making it less risky from an indebtedness perspective, and now, last but not least, we must check the valuation metrics. The price to sales for Samsung is 1.1, which is a low level. The price to book ratio is 1.4, meaning we assume only a 40% risk for each dollar we invest in the company, as we pay only 40% more compared to the liquidation value of the company. The current PE is very low, sitting at around 8.5, but this is due to other non-operating income. The forward PE ratio for the company is 26.7, which for me is a bit too high. I would like to buy Samsung at a PE of around 16 to 18. I would pay a little extra than the average for the market, as I really like the other fundamentals. Overall, they appear to be a solid investment option for those looking to invest in the technology sector. As with any investment, it is important to do your own research and carefully consider your investment goals and risk tolerance before making any decisions. Thank you for watching until the end and until the following video.